But before we get there, I want to throw you a curveball. We did not talk about this.
Oh boy, here we go.
But it just came to my mind.
Yep.
This is the problem when your friend comes on your podcast, because we talked about everything but this
Okay.
in our prep session.
Yep.
Welcome to a Wiser Retirement Podcast. Are you curious about the latest news in the world of cryptocurrency? I'm Casey Smith. Today, I'm joined by Robert Swarthout, founder, CEO, and portfolio manager of Teton Crypto Capital. Each week, we bring you practical advice on retirement, investing, and planning for your financial future. Don't forget to subscribe to the podcast wherever you're listening. Let's get started. Hey, Robert.
Hey, how's it going?
It's going pretty good. Let's get into the topics. I'm sorry. The title is Retirement Plans Are Adding Bitcoin. And so we're definitely going to get to that.
Yep.
But let's go through some news first as we work our way,
Absolutely.
we work our way down the list.
Yeah. It's, there's lots of news in crypto. The month of August was kind of quiet, but it is picking back up. And something that we've been waiting for, I think, as an industry is just more ETFs, more crypto ETFs. And those have, in the last week or so, really got to kick off. And some of them are launching, some are soon to launch. It's a big deal. And I think what really is allowing this to happen is the SEC recently approved the ability or a process for crypto tokens that want to have a spot product traded to have an easier process to get there. Like prior to this, they're all the 1940s Act, I think is what they called it, the process. Mm-hmm. It was rather cumbersome, probably a thorough process, but also probably overly cumbersome for just a simple crypto token. And what the SEC has come back after a lot of public comments and different things has said, as long as a crypto token, a spot token, has 6 months of futures coverage on Coinbase futures, mm-hmm. then there's basically a green light to launch a product. As long as it's a simple product. They don't talk about staking right now or anything like that. I think over time we'll see that evolve. But last time I looked, and it's admittedly been months ago, there was close to 100 crypto ETFs waiting to launch. And we're about to have a lot of choice in the market.
And I think that helps frame the conversation as far as how I feel about crypto options and mm-hmm. 401k plans. But before we get there, I want to throw you a curveball. We did not talk about this.
Oh boy, here we go.
But it just came to my mind.
Yep.
This is the problem when your friend comes on your podcast, because we talked about everything but this in our prep session.
Yep.
All right. So I was listening to an all-in podcast while I was working out recently. They just had their big summit. One of these days, you and I should go to that thing.
Okay.
So the summit, they took each speaker segment and just posted as a podcast. So there's a bunch of 5 to 10 minute podcasts that just launched there. So Solana's Anatoly, Anatoly.
Yeah.
How do you pronounce his last name?
Oh, I don't remember.
Yakovenko. Yovakakino.
Okay.
I'm probably butchering that.
Sure.
So sorry.
Yeah.
So it was a great 25-minute chat.
Right.
And he talks a lot about stable coins.
Right.
His prediction is in the next 5 years, the largest holder of stable coins, as far as U.S. Treasuries go, the largest holder of U.S. Treasuries will be
stable coins.
It will no longer be China, no longer be Japan. Mm-hmm. He showed a chart that the current holdings are to the far right.
Correct.
But they have a representation
and the rate that they're growing.
They're growing very, very fast.
Absolutely.
So my question to you,
and
you're welcome to comment on that prediction,
Yep.
is you think about, China's not going to mess with U.S. treasuries because their currency is based off of the U.S. dollar, right? They hold treasuries to stabilize their own economy.
Right.
People don't realize that.
Mm-hmm.
So if you hear any conspiracy theories that they're going to be the new world currency, okay, fine. It's still related to the U.S. dollar.
Right. Correct.
Right.
Yep.
So what could go wrong with stable coins owning so much of U.S. currency? Because in my simple mind, I go, wow, like how could then stable coins manipulate the treasuries? Because what if you had mass sell-offs because of panic?
Yeah, I don't know if I have an answer specific to what could go wrong? I would say what I don't like about the Genius Act that went through that kind of laid the framework for these stablecoins is
Yeah,
stablecoin issuers are not allowed, legally not allowed to pay interest to holders.
correct.
So you're about to be in a world where stablecoins gobble up trillions of dollars, and those businesses are going to have, even in a low interest rate environment, huge cash flow
Yeah,
from that product that doesn't come back to a holder.
right.
So you have that problem. I think that over time that may get changed. There's some rules.
Once
'Cause-
that creates problems, then it probably would get changed.
Right, absolutely. So you have that. But generally, I think I'm actually on the flip side. I have trouble finding a reason why it could go bad and a lot of reasons why I think it could go good.
Yeah.
Not obviously, maybe I need to think about it harder. But I think to kind of his point, yes, it is going to be a gigantic market. And I'm even in the camp that the stable coins as an quote unquote industry potentially help save the dominance of the dollar for decades to come
Absolutely.
because there's such demand for the treasuries,
Yeah.
right? And
finances all of our debt that we're
Correct.
having so trouble.
that we're going to have to
Yeah.
refinance. Absolutely. It may be a bit of a rabbit getting pulled out of a hat at some level.
Right.
And I don't think this whole thing was set up to do that. I think it just by happenstance is going to work out that way.
Yeah.
But it's pretty crazy to think that's an industry that a year ago and for the previous 4 years was trying to be killed, potentially could end up being the industry that saves the market that they were trying to protect initially.
Correct. I think that's a whole podcast. I think this would be a good little
Absolutely.
clip to pull out and say, listen to this episode. So
Yeah.
we should probably tee that up for the future.
Yeah.
But I found that very interesting because my initial thought was like, wow, that really is going to help save U.S. debt in the long run. And of course, everyone over the age of 40 at this point is going, what's a stable coin? So, we'll have to come back to that, but
and we'll use an example of how stablecoins are already being able to be used in ways that people wouldn't have thought of. It didn't even make it in our notes to talk about, but so there's the BlackRock's ETF, the BUIDL ETF. It's the tokenized treasuries, I believe. As of today, you can now 24/7, 365 convert that into stable coins through Securitize without having to have obviously a market open.
yeah,
That's currently only to the Ripple stablecoin on Ethereum. Soon it will be Ripple stablecoin also on the XRP ledger. Like we're about to be in a world where there is no time clock on this stuff. It just happens, whether you want it to or not.
yeah,
And people that like that traditional clock are going to go through a brain warp a little bit, I think, initially, because they're used to that, I guess, pause.
yeah.
But the news cycle, good or bad, is
Market will no longer close at 5 p.m.
Right.
The market will be open continuously.
And that's what the crypto market works now. So it's no different for a crypto
Right.
person.
Although, I have
it does get lulls.
yeah, I'm just saying, I have a what do you call it? Tidbitty.
Yeah.
It's a little thing that looks like when we were kids, we had the little light pins and
Yep.
you put them into the little box. You could design things. But it's on the Brave score. It's on the weather at the airport,
Sure.
the METAR, and then the next one's the Bitcoin price.
Yeah.
And I've noticed that after 5, 6 p.m., it doesn't move that much.
Yes. In a normal, with air quotes around it,
Yeah.
trading environment for crypto, yes, it is largely around the US clock, business clock of sorts. In a crypto bull market crazy cycle, 24/7, because you end up with Asia who loves crypto,
Yeah.
being on the opposite side of the clock from us.
That makes sense.
So
That
it
makes
does
sense.
get crazy, but it's
I
we're
saw
quickly getting there.
I
So
think I saw 115 this morning, 115,000.
yeah, and then it's down to 112. So
Was it?
it's been highly volatile this month.
Yeah.
Especially some of the major alts have been up and down 10% or 15% in an hour or two.
Yeah.
Like there was a sell off this last Sunday that wiped out I think 1.5 billion of leveraged long situations. So I was excited when I saw that, not because it went down, but because I knew you always have a reset like this before the market goes higher. The market gets manipulated, it gets reset, gets people out of those leveraged long positions. So then
Right.
the market makers don't have to pay up is effectively what that is. So welcome to the non-regulated side of crypto.
So let's shift gears. Cryptocurrency inside your 401k plan.
Well, I texted you about this last night, and
Yeah.
so
Yeah.
I'm been excited for this. This has been a long time coming from a crypto perspective, but there's a lot of, I think, admittedly, checks and balances that need to be put into place, or things can go really wrong for people in an account that they probably can't afford to have things go wrong in.
Not like crypto winter wrong for sure.
Right.
So first of all, we are a positive crypto firm.
Hmm.
We gave people a year and a half ago now options to opt into crypto. But more than that, right? Almost 2 years, right?
Almost 2 years. Yeah, I think so.
To opt into having cryptocurrency in their portfolio. However, I was not willing to take my firm and put it on a platform no one's ever heard of and buy crypto before
Hmm.
it came out on like SEC approved ETFs.
Right.
So we started the game when the SEC said, okay, you can have a Bitcoin. And then shortly after that, we had Ethereum.
Okay,
So we have
correct.
Bitcoin and we have Ethereum in portfolios, and we'll have other things in the future
Mhm.
as they roll out through the ETFs. Right.
And one of the actually new ETFs that started launching or trading 2 days ago is the Grayscale index of the top 5 biggest cryptos started
Mhm.
trading. So once there's an index, it makes total sense for you to use because
Yes.
then you don't have to figure out the mix.
Right. Correct. So that's something I'm sure Andrew's looking into. I love Bitwise as a company, so I wish they had been the
They
first
have one
ones.
that's been
So
applied for but hasn't launched for whatever
hasn't
reason.
launched
Yeah.
yet. So I will say this is before the recent rise. So this would be 3 months ago.
Mm-hmm.
If you added 2.5% of our crypto mix to your portfolio, you added an additional 2.5% rate of return to your portfolio, which if you think about the bang for the buck,
yes,
that's huge.
Yes.
Right. Of course, some people are looking and going, I'm up 75%. Like, why didn't we buy more? It's like, well, that's just human nature, right?
Correct.
If it's down 75%, they'd be like, why do we buy so much?
Right. Versus now's the time to buy.
Right.
Yes.
So this thing has long legs. Like this is a 10-year commitment inside a portfolio. So from that standpoint, yes, we're pro that. We have it in IRAs. We have it in brokerage accounts. The brokerage accounts are nice because you can tax loss harvest the crypto.
Mm-hmm.
So you have a lot of volatile markets, but if it goes down, you can sell it and buy something else right away.
Right? As of the I think it was wrapped up in the Genius Act, you have to do the normal 30-day hold now.
30-day hold?
Or 30 days.
But why couldn't you you could still sell Bitcoin from one provider
to
another ETF.
Yes. So I think of it as the raw crypto, but yes, ETFs, that would work. Yes.
Yeah. So we can still do that in ETF world. So that from that standpoint, positive, all clients should have done it. We had a 15% participation rate. If I had to guess, we're probably around 20% participation rate now.
Mm-hmm.
More people come in asking for it,
right,
than they have in the past. Or some people have said, why don't we do this in our portfolios? And I said, well, you got an email to opt in or out, and we send it 5 times.
Yeah. Do you find this to be like clearly different age buckets, or is it?
Everyone under 30 was like, opt me in. But
Yeah.
honestly, everyone under 30 was putting in like $500 into the crypto side.
It's not material, right?
No.
Yeah.
And then everyone that we would call qualified, high net worth,
right,
most of them opted in. So you have some people with $500 and you have people with $150,000.
Right.
And then you got people in the middle who are like, no, that's not for me.
Mm-hmm.
More cautious, not quite sure about.
Because it seems like a gamble, but that stigma I think is slowly wearing off to being it's an investable asset class.
It is. I think it is where it is starting to wear off because people are seeing this positive return of it. But I would say that most people can't really tell you exactly what it does.
Most people, 99% of people can't tell you what it is.
And if they can tell you what Bitcoin is, sort of, they definitely can't explain Ethereum to you.
Right. Or anything else.
I don't know that I can fully explain Ethereum to you at this point. I mean, I understand it's for transactions and cross-border transactions, but it can also be for a lot of other things too.
Right. It's a bit of a Swiss Army knife of sorts.
Right.
Yeah. Which is a good thing and a bad thing.
Right.
Yeah.
Before we get back into the episode, have you ever wondered why annuities keep coming up as a recommended investment? While they're often pitched as a way to reduce risk and secure your future, annuities frequently benefit the salesperson more than the investor. Download our free guide, Buyer Beware, Why Do They Keep Trying to Sell You That Annuity, at wiserinvestor.com/guides. Now let's get back to the episode.
So that's and of course Ethereum is a much smaller percentage of the allocation. So I just say this with optimism that this is a part of the future. If I brought you a DVD in 1980
Yeah.
You've been like, what is this?
Mhm.
What would I do? I don't understand what I would do with this.
Right.
And I said, buy this
Mhm.
because it's going to be a lot cheaper now, because in the 90s, they're going to come out with a DVD
Mhm.
player, and then you can start using this stuff.
Right. Exactly. Yep.
That's kind of how I feel like where we are in the very early stages. And even if you have to be late and pick up the ETF later, I think the normal investor understands ETFs and they can buy it inside almost any platform.
Mhm.
If that makes sense.
Right.
When you start fishing the web and it's like, I heard about this one, I'm gonna buy this one.
Mhm.
People don't understand. Normal people don't understand how to allocate things.
Correct.
And so they get ready to allocate, and you look at their portfolio and they've got 60% of their net worth in crypto.
Mhm.
Are you a really big risk taker, or do you fully understand what you're doing?
Right.
And most of them, I don't think fully understand what they're doing.
Yeah. I mean,
So that's my fear. My long-winded answer
right.
is that if this is available in 401k, which those ETFs you can already buy in your 401k if you have a brokerage link.
Mhm.
But if it's just an investment option within your list of investments, I have a hard time believing that's going to be coming around anytime soon. It may be approved.
Right.
It doesn't mean that the trustees are going to do it.
Correct.
But if that were the case, we would see commodity funds in the ETFs. We don't even see those, right?
Right. That's a good point. What I think aligns really well here, at least in my mind, is 401k plans or retirement plans are long-term thinking, right? Like that's
Which
the whole
is why
point.
crypto should be in there.
Right. It fits very well with that, because like that's the time horizon you need to think about crypto on.
Right.
Yes, it might have cycles up and down in the meantime. So does the stock market, right? But I think that
much more volatile, but yes.
Yeah, absolutely. But it's the same kind of thinking versus I might think people that are using crypto or crypto ETFs in a brokerage account, and if they think that they may be trading it, they're more gambling than anything else, because they don't understand how the crypto market trades.
If I was a trustee of a 401k plan, I would never put gold in as an investment option, because every prepper,
right? Yes.
Every dude that's just like normal worker and he watches TV at 1 o'clock in the morning is gonna be like, buy gold. This is the only thing that's going to save you. And he'd have 100% of his money in gold in the 401k plan. And he would have just tanked his entire ability to retire in the future. Yep. Which is why you see more and more 401k plans. They have the S&P 500, they have small caps, they have international, they have a stable fund, and they have a bond aggregate fund.
Mm-hmm.
That's your investment options. And then on the other side, you have portfolios pre-made for you on that side. And that's how you reduce your liability as a trustee.
Right. Is it Fidelity was the first one that launched Bitcoin 401ks, a year or so ago. But they capped it. They capped it at 10% of your portfolio could be put into it.
But again, half our clients have Fidelity 401k plans. I've never seen a crypto option in there. It's only if the trustee chooses
fair enough.
to allow that.
Yep.
So their documents said, hey, on our list of 5,000 funds you can choose from, we're going to work in crypto now.
Do you think this is more of a marketing thing than it is actual like wanting to provide the product?
Well, I think there's some legislation, right, that help push this, correct?
Well, currently it's an executive order that Trump had signed to saying it should happen. And now some senators or, House reps are trying to lobby the SEC to make it easier, I believe. It's kind of like this gray area, if I'm not mistaken.
I think making it easier means we're not going to hold you liable for adding it to the portfolio.
Potentially, like take away some of that risk.
Take away some of that risk of we won't sue you. Kind of like the vaccine.
Right.
Here, create a vaccine. We're going to force everyone to take it. Yeah. If it's wrong, you can't be sued. It's like, that's awesome. I just, people we're our own worst enemy. And if you think about something long enough, you believe that it's truth. And then you start acting on truth, which isn't really truth at all. And so that's my concern is like, man, are we going to let people get so greedy? But I think putting, you can't put more than 10%. I would say 5, no more than 5. Then I think that makes sense. But 401k, switch that out. IRA, anything geared toward retirement, would crypto in the portfolio make sense? Yes, I firmly believe that. However, you can have too much of a good thing.
Right. So on that topic of too much, so say you chose 5% and the market runs and it's all of a sudden 15% of your portfolio.
Yeah.
Should they trim it to 5%? Like I know every situation.
I have a hard time making that decision. I can't imagine someone who's uneducated in all this making that decision.
Right. I mean, because this human psychology says, oh, I need to buy more at that point.
Correct.
right?
Because it does so well.
It does so well. And,
Yeah.
you know,
and the opposite when it goes down, when you should be buying more.
Right. Yeah. So I don't know if these, you know, Fidelity or whoever the trustees are going to enforce some kind of auto rebalance or like how they're going to manage the situations. But I could see a world where somebody buys 5% and you wait 20 years and all of a sudden it's 75% of the portfolio. Like, it doesn't seem crazy to me.
I would agree. That's what we've seen so far, because our initial investments were like 1.5% to 2%, and now they've grown to 5%.
Right.
And we're in the exact same predicament. It's like, what do we do? It's like, well, we're okay with 5%. But also, you know, Matt Hogan and all the Bitcoin guys out there, they were saying 1.5, and it went to 5%. And it's like, no, 5's okay. 5's okay. So everybody's having the same issue and trying to determine, when do you take your gains? The whole point of buying 1.5% of your portfolio was the fact that, hey, if this thing really goes, at the time it was at 60,000,
right?
If it really goes from 60,000 to 400,000 or $1 million,
right,
or 4 million
over long years, a lot of years, yes,
yeah, then this adds so much to your rate of return. But the problem with that calculation was that you never assumed you took the gains and reinvested in the rest of the portfolio, right? Mm-hmm. So you cut off that return when you rebalance it. So for us right now, we've just let it ride.
Right.
But there is a point.
And that's a totally valid strategy. I mean, like there's, you know, my crypto fund largely is a buy and hold strategy. But we will try to play the cycle. But what comes with that is the crypto cycles ever since the beginning of crypto, so call it 15 years ago.
Right.
There's definitely a pattern to them. And that's why, you know, you might sense sometime when I say something or you hear other people talk about crypto, like they feel like they can predict the future. At some level, you kind of can. But what I think is about to change is we get regulation and all of a sudden we get real money in this space.
Yes.
The patterns will change. Now that you have some futures products trading in the CME, that definitely manipulates it. You want to watch something fascinating, watch around 9:45 or 10 o'clock in the morning when the markets are open, equity markets are open, and watch the price of Bitcoin drop. Because Jane Street's running their algos and they come in and they hammer the price. And then that around 10:30 each day, it sounds like that's when BlackRock and the other ones come and buy the product that they need, like rinse and repeat every
single day. Interesting.
Nothing illegal about it.
Right.
But it's like, you know, if you're a long-term holder, none of this matters.
Correct.
But if you're in it day to day, or you think you're trying to time it, it could be a difference in some gains there. So,
yeah, I would never encourage that kind of trading.
Correct. Yes.
And really all you can buy right now is Bitcoin, Ethereum, and evidently this new Grayscale.
The Grayscale.
There are others, but they're not spot.
So there's an XRP spot ETF now. There's a Doge one. And I think there was a Solana one launching, or it's about to launch. So, but we're about to have, you know, of each of those three that I just mentioned, we're about to have 8 to 10 of each one of them. There's a lot of applications.
XRP, is that Ripple's?
Well, Ripple, the company, XRP, the token. Yes.
Yeah.
That's the one that they're attached to the hip at. But it still just blows my mind that we have a Doge ETF, like a meme coin ETF.
And people still buy it.
Right. Well, you're right. I mean, to me, that's pure gambling in a brokerage account at that point. But, you know, I guess you could be buying the 2X or 3X leverage ETFs for Tesla or something, and it's probably no different. So
yeah, that's that's Rex and Osprey that did that one together. Trying to pull up. I just while we're chatting here, just real quick, what that performance was, or in the launch state.
So I don't know.
It's only been around for 3
about
months.
The percent change, but I can speak to a little bit to that one. In that, so Eric Balakunas, who's at is it Bloomberg? Anyways, he's an ETF analyst,
down 6%,
and he was saying how that he was blown away by the volume of that one out of the gate. He didn't think there was going to be much volume. You know, I don't think it really matters whether there's volume or not initially. It's all about where these things are going long term. But it's I think that down 6% is more to do with what happened on Sunday in crypto.
Yeah, it's only been out for 3 months. So,
well, it started trading last week, so it was applied.
Oh, you're right. September 18th of 25.
Yeah, so last week. Yeah. So there was a sell off in crypto largely on Sunday. So.
Yeah, you can't. Bitcoin was down too when it first launched for a while.
It's all about the trajectory, not about the day to day. So,
yeah, I think in the end, if someone wanted crypto in a 401k plan and I was their plans advisor, I'd be looking for one that maybe represents the top 5.
Top
by
5.
market
I mean,
share.
the Bitwise one I think that's coming down the pipe is a top 10. I think that makes a little bit more sense.
Right.
But yes, I think the idea that you're buying individual products that represent a single crypto, and it seems like you're more stock picking, then that's not the point of a 401k.
No.
So you want these broad index things.
Our firm, we're big indexers. So we own the S&P 500 versus individual stocks. You can imagine you have all these core legacy holdings, and then you have like 20 crypto ETFs. That's going to look pretty funny.
Yes. And hopefully the market, I guess the applicants catch up to that. And I would assume very quickly that happens to where there's, you can buy the individuals, but at the end of the day, it's about buying a index, or it's an index that's market specific, whether it's, US based cryptos, or, there's all sorts of different buckets I think they can make up. So,
right. Absolutely. Yeah. I would just say you have to be cautious. But everyone 100% of our clients should opt it in. Honestly.
Obviously my rose colored glasses here says yes, but I think
hindsight says yes too. So it's easy to say that now, or at the beginning,
right.
Conversations were a little more, hey, this is the risk involved, but
I think that what people forget here, yes, it does make sense in my opinion, but also this is the first time, again, there's a new asset class in like 150 years. People that are advising on this have never lived through this. So the idea that
the last asset class was bonds, right? Was bonds.
Yes.
Yeah. That was 150 years ago.
So, it's new to everybody. But I think that just a little education along the way will help people be more curious and certainly drive some demand. So,
yeah. All right. Thank you, Robert.
Yeah.
Anything else? Did we get it covered? I think we got it covered.
This was a slightly different topic. Normally we talk about a bunch of different things. This one was a longer topic.
I think this is important. I think it's, you got to make sure that greed doesn't ever set in on these things too. You have to keep a level head about you. And I think it is a good idea to trim those gains at some point.
Right.
Definitely at the 10% mark. I think as it passed 10% of your net worth or your portfolio's net worth, that's probably a good time to say, hey, I'm going to take you back to 5 or something.
Correct. And just understand that it's a long-term game versus the short term. It's likely to run a little bit more even after you sell and trim those gains, because you're likely not buying the top,
right,
or selling the top. So you would just have to be okay with that. So,
all right. Thanks for listening to today's episode. If you're learning more, interested in learning more about Wiser Wealth Management, you want to schedule a consultation, meet with one of our fiduciary financial advisors, you can do so by going to wiserinvestor.com, or you can click in the episode notes. You can also learn more about Teton Crypto Capital and Robert's fund at tetoncryptocapital.com, or you can email Robert at
tetoncryptocapital.com.
Thanks for listening. See you guys next week.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening. That way you don't miss any new episodes. We'd also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. This podcast is strictly for informational purposes only and is not to be considered as investment advice or solicitation to buy or sell any financial products, securities, digital assets, or any other investment vehicles, or a basis to make any financial decisions. Wiser Wealth Management Incorporated is a registered investor advisor with the SEC. The host and/or guests may personally own securities, digital assets, or other investment vehicles mentioned on this podcast. Neither the host nor guests of the show are compensated for their participation, and no referral fees are paid to or received by any host or guest for clients, listeners, or similar interests. Investments involve risk, and unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor, tax professional, insurance professional, and/or legal professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.